Hey guys, what's up? What's up? What's up? What's up? What what character says that? One of Jeff Dunham's characters. Who is it? Peanut? I can't remember who it is. Sounds like Martin. Man, Tesla jumped 10 points since the close. Always. There's always something going on with Tesla. Always. All right, guys. So I want to welcome you all. I'm doing this first for you guys that are hanging out with me for the first 2 weeks of 2021. I wanted to try and give you the best start possible. I know it's not a whole lot I can give you in 2 weeks, but I can give you the right direction so that you have focus the rest of the year. So no matter where you go, whether you stay here or whether you go somewhere else, you're going to know exactly what you need to be focusing on in order to be successful in this industry. So my goal is to help you get your 2021 started out right. And, you guys that's been with me for a little while or been with me from the beginning, a lot of this stuff you probably have heard before. It may have been in a different, I might have said it differently. As a teacher, it's rare that we teach the same thing the same way every time. Especially me, my mind is all over the place sometimes. But I want to welcome you guys. And, oh, okay. I was fixing to say, man, I can't start out with this doggone technical difficulties. All right, so what we're going to talk about today, I'm doing two classes for you. Really, it's to orient you to me, what my focus is, so you can get the most out of these 2 weeks that you're here. Kind of explain to you how I got here, some day trading truths that you really need to accept before you really start moving in this field. The process approach, which is my process. I'm going to talk to you about my trading tools that I use and my strategies so you can, really get a good understanding of what I do. And honestly, I think the best way to learn the strategies is to watch me trade them or watch me talk about them during the day while the market is moving. That's why I trade live. And I don't care if I make a mistake because I think that's when you learn the most. Like this morning, first trade out of the gate, I slipped. But it happens a lot because I've got a lot going on other than trading. So every now and then I'm going to miss something. But that's the beauty of this. So my dream in the beginning was to be a stockbroker. It started, I think, in the 8th grade when that was the first introduction to the stock market I got. I think it was in a home ec class because we did personal finance and taught us how to cook some stuff and wash clothes and all that stuff. It was a crazy class to be in the 8th grade, but this stock stuff really got me going. And I got real interested in it. And obviously I picked the stocks that I knew. Um, right here around the corner from my house is the Pepsi Cola plant, and about 3 miles down the road at the time was a Coca-Cola plant. So, of course, I would pick those two stocks. I knew those, and just pick the stuff I knew, and it was a lot of fun. And I ended up, winning that thing. And then in high school, I did the same thing. So I was so excited about it when I was telling my parents and my teachers, the guidance counselor, about what I wanted to do. You could imagine what they would say. You're going to lose all your damn money, son. How many of you have heard that before? You're going to lose all your damn money messing with the stock market. And it's rigged to break you, and all of this stuff. I'm like, well, why are all of these people doing it if they're losing money? It doesn't make sense to me. But that's what my family told me. They were paying the bills, so I had to go where they wanted to go. So they advised me to go to college and get a real job, 9 to 5. What kind of life is that? I mean, really, to me, I just, it wasn't a life for me. I mean, not for me anyway. For some people, it is. For me, it just wasn't. I was not that type of person. So once I got out on my own in 99, I opened up an AverageJoeTrader account. Back then, it was just AverageJoeTrade. It wasn't TD Ameritrade. So what do you think I invested in? Coke and Pepsi. I put some money in that. I worked for AutoZone at the time as a commercial accounts manager while I was trying to get my business off the ground. And working at AutoZone as a manager, they had just gone on the stock exchange and went public, and as bonuses they gave us stocks. And at the time, it was like 30, anywhere from $25 to $35 a share. And we had the option of buying some more and all of that. So I was like a tycoon, man. I thought I was on top of the world. Here I've got AutoZone stock, and I got a little bit of money in Coke and Pepsi. And so I started trying to trade with the little bit of capital that I did have, available, trying to find like some speculative stocks and stuff like that. And of course, I didn't have a clue about what the hell I was doing. Unfortunately, I was a little bit too soon for the .com boom, which probably would have helped me out a lot. But I lost all my damn money again. Well, the first time. This was the first time I lost it. But I didn't know what to do. I had no clue. It's like I came in and I just started buying stuff, and all I knew was to buy low and sell high. That's what I thought the market was. But little did I know. So I remember how happy I was, how excited I was to have a brokerage account, to own some stocks, and have a couple of dollars there that I could kind of mess around. But then I started feeling these feelings: fear, anxiety. I was nervous. I had knots in my stomach because it was, I had not experienced anything like that before. So it wasn't long before all of that good feeling I had, all the confidence I had, went away. And soon after that, my money followed. So fast forward to 2013, I'm watching TV late at night, and I'm watching Tim Sykes came on, and he didn't say this in so many words, but this is what I got from what he was saying. that trading was easy. All you need to do is follow a set of rules and, buy here, sell there, and you can make some money. All right. And you don't need to invest in a college education. You can learn all you need from me on the internet, through my courses. So that's really what he was selling. And he said all you need is a laptop, a cell phone, a tablet, then an internet connection, a brokerage account, and you can do this from anywhere in the world. So just imagine how that made you feel. I mean, I'm sure some of you went through the same stuff when you first heard it. And man, I was excited. And my dream of being that guy kind of started coming back around. But it wasn't long before reality struck. And, I went through it again. So I learned some truths. And I had to accept these things. So before we go any further, I want to share these with you. And I want you guys to know you're going to have to accept these if you're going to, make it in this industry. It's not something that you can dismiss. Okay, the truth one, all of those myths that I shared with you before, they are false. And, trading is a legitimate profession that requires organized education and practice prior to becoming a successful trader. Some people practice with their own money. Unfortunately, that's what I did. I didn't know any better, and then when I did know better, I had that mindset that, hey, I don't want to make a big trade and it just be fake money. So if I made that $1,500, I want it to be my money. But knowing that mindset is what was killing me in the beginning. All right, truth number two, your trading success is not going to happen when you want it to. You got to understand it's a process. It's going to take time. Trying to find a shortcut or the holy grail is going to lead you to a blown account. So you have to understand it may take you longer than the person next to you. Some people, it takes 2 or 3 years before they really get to the point that they can make a living. From 6 months to getting consistent with it to actually being consistent enough to make enough money to, make a living. It just depends on you. 90% of trading success is psychological. 10% is process and strategy. Now, the traders in my community that's been with me for a while that have done that that exercise, this actually proved it to them that every mistake they made was really mental. You have a set trade plan that you use every day no matter what, and the fact that you can't execute it proves that this is what happens when you're in the open market. You can't execute your trade plan because of the psychological stress that beats on you from the market. All of this input is wreaking havoc inside of your brain, and you really don't know it. So if you don't have your mindset in check, you can have the best strategy in the world. You can have a strategy that pays 90%, but you won't be able to trade it worth the shit if your mind isn't right. You're going to be all over the place. Okay, truth number 4. Most all self-proclaimed day traders lack the right education. the internet is full of these guys. The social media is full of these guys that they're self-proclaimed day traders. They think they have the best strategies. A lot of guys popped up this year because trading was so easy if you bought and held. If you were buying off the bottom, I mean, it was so easy. But once that dried up, that was it. How are you going to make money? The market doesn't do that all the time. So, they have all of these bits and pieces of information that they got from listening to other people, taking this class, that class, but they don't understand how to put it together in order to help somebody get from point A to point B to point C to point D to where everything makes sense. They don't really understand or know what true trading success looks like yet. Haven't been there. Haven't done that. Truth number 5, you have to treat your trading like a small business. You've got to establish a business plan. You have to establish a budget and stick to it. So you understand how much money you're going to put into this every month. If you don't, you might sink too much into it and it may put you in a really bad spot. So it's really, really important. And this is one of the first things that I try to help you establish in the roadmap to success. Because it wasn't until I started thinking like this, I was just all over the place. I didn't know where to go, what to do, or how to do it. And truth number 6, and this is the big one, guys. You have to be ready, willing, and able to take full responsibility for whatever happens with your trading. It doesn't matter if the broker screws up. Doesn't matter if the internet goes out in the middle of a trade. Whatever happens is your responsibility. And trying to blame it on other stuff, and it may even be their fault. Just accept it because it's your money, it's your trading account. You accepted the risk when you started doing this. So that will keep you from trying to place blame all over the place. And I think we're going to talk a little bit about this tomorrow in the Trader's Mindset class. But why that's really bad for you. And you shouldn't place blame on everything and everybody. All right, so here's what I found that's, true of new traders. The first exposure to trading is to an internet guru. I mean, I would be considered an internet guru. So that your first exposure to trading is through that, through social media. Another thing I realized, most are undercapitalized. Not everybody is coming in, but most are. And that creates an issue. But more importantly, they do not have a process and don't realize they need to have a process in order to make money in this industry. Now, our process is going to protect us. It's going to protect our capital, our emotional state, and our confidence. If we lose these three, if we lose our capital, if we lose control of our emotions, if we lose our confidence, we are a train wreck. So, one thing I want you guys to understand is that there is a distinct difference between a losing trade and a bad trade that lost money. as well as there's a distinct difference between a winning trade and a good trade that made money. I know I've said it till I'm blue in the face that it takes zero skill to make a winning trade. All you have to do is point and click. Both of my cats, well, my daughter's cat Leo and my cat Lucky, have walked across my keyboard, entered into a trade that ended up making money. I mean, no skill. They had no idea they were even getting in a trade. It takes zero skill. But in order to make a consistently winning trades, you need a process, which includes a strategy and everything else. And that's the difference. A process. It's okay to have a losing trade, but a bad trade is what I did this morning. That's a bad trade where I get in and I get in and I don't mark a significant daily level and I lose on it. Okay, that's not a losing trade. That's a bad trade. It's bad because my process was broken down, regardless of why. And I know why. I was trying to do too much. I have a rule that I don't look at emails or do anything until lunchtime. Once 8:30 starts. But somebody was having trouble getting in. But whose fault is that? It's mine. It's my responsibility. Regardless. I made the decision to break my rule and do this. And in turn, my focus is not where it needs to be. Bad trade. All right. So a good trade is when we make money and we stuck to our trading strategy, the entry, the exit. We did everything that we were supposed to do. It's not that we just jumped in chasing something because somebody said it was moving and we happened to be watching our P&L and then just take some money off. That was that would be a winning trade, but it wouldn't be a good trade. Good trades build your account. Losing trades those are the acceptable losses that we incur as part of doing business. That's what losing trades are. Just think about if you're in a restaurant business, you're going to have acceptable loss when it comes to food and perishable items. You never want to run out, so you're always going to have extra. And so that extra is going to go bad. But if you don't have it and you're short, you're going to lose business, you're going to lose customers. So it's best to make sure you stay in business and you have that acceptable loss. You write that in. That's burnt into what we do. That's what a losing trade is. A bad trade is, risk that we didn't have to incur. So as a professional educator and engineer, I firmly believe in the process approach, really to anything. But I really believe in it as it relates to trading. And I think everybody, any professional trader will tell you the same thing. Everybody has their own process. And, I guess I can say it's a big secret to my success, but it's really not a secret Because, like I said, all professional traders have a process. So just think of something that you do every day. Just a menial task. If it's brushing your teeth, or making up your bed, or when you start your car up to drive and back out the driveway. If you think about it, there is a process that you do every day, and you do the same thing every day. Every day. And I can't tell you how many people have had accidents in their car because something disrupted their process, subconsciously disrupted their process. And so whatever they were doing that morning was a little bit different. Either they were a little bit late getting to where they wanted to go. It put them in a spot that they're not normally in, and it caused them to have an accident, or be late to work, or whatever. So that the same way with trading, when we have a process and that process gets screwed up, then we pay the price. And again, case in point was me this morning. I paid the price because instead of sticking to my process and transferring these relative data points to the DOS chart, I was on my email. So that process was broken, and it screwed everything else up that followed. Okay, so in trading, my process, it's going to help. It tells me how to find the stock, how the trade is going to be put together, how it's going to be laid out, my planning. It provides the focus for me to execute and manage them. If the entry trigger, the profit targets, the stop, all of that. And it provides a tool for me to reflect on the trade to determine if there's something that I missed or something that I could have improved on for the next time. So my process is this. Now, my morning routine can change depending on my son's school schedule. When he's in school, I have one process. When he's home, I have another process. And so that, when I eat, when I wake up, when I'm able to work out, anything is going to depend, it's going to change. So I had to come up with a set process for when I have to take him to school and a set process for when I don't have to. But that's my morning routine. And you'll see my process consists of a set of routines. So my pre-market routine, about 7:30, I'm listening to Benzinga. I bring up the scans for you guys. It just depends. Between 7 and 7:30, I bring up the scans whenever I get to that. But I bring up the scans. I kind of look at what's happening. So I'm going to watch CNBC or listen to Benzinga, find out what happened overnight, and what the street is focused on for that day. It's always good to know what the underlying mood is or focus in the market for that day. Even though it's not going to really determine what I do, it's what I do is based on what the market is doing. So if the market's reacting to all of this stuff, I have an idea of why the market's reacting the way it is. And if the market seems untradeable, then I'm not going to trade it. It's just that simple. But I start to build my watch list, and that's when I log on about 8:30, and that's when we start to build our watch list. Now, if there's 2 or 3 stocks, then I probably will wait until 8:45 or so just to see if anything's going to pop up. But between 8:30 and 9, looking at the stocks. I'm building my watch list. I'm marking the significant daily levels. And that's when all of that takes place. And then there's a time between, say, 9:10, 9:15 to 9:30 that I can meditate, or I listen to music. Anything to kind of ease my mind to get me ready to go while I'm, transferring these levels. And again, this morning I didn't do it because I was doing something else, and it can hurt, So, and then once the bell rings, I execute my trading day. I'm going to look for opening range breakout or breakdowns until 10 o'clock in the morning. After 10, I'm focusing on continuation and reversals. I'm looking for stocks to continue in the direction, breaking out of its channel, or, reversals if there's nothing else happening. And then, I'm going to run the aftermarket earnings scan later in the evening and prepare for the aftermarket session if there's a reason to do that, to pay attention to it. But, I go to lunch every day. I take a break. Now, my lunch schedule could be different depending on if I have a mentor session during lunch. That's going to adjust my time and when I do when I eat or anything like that. But that time between 11 and 1, I know it's not going to be the same every day. It's going to be different. So that's already baked in. So when I come back after 1, I'm focused and I'm ready to nail the rest of the day. And reflection is really key. If you're with me long enough, you're going to hear reflection over and over and over and over again. That's where true learning takes place. That's when you're able to reflect on what you did, your actions, what happened when you did this and what happened when you did that. And you're going to make note of those things so that the good habits that you have discovered that helps put you in a better position in a trade, those are the things that you're going to want to continue to do. The things that you did bad, you're going to want to fix that. However you need to fix it. Like with me, I've got a sticky note that says do not trade in effing channels, because I was having a problem not waiting and trying to jump in and trade before the break and anticipate. So I've got a note there, a sticky note, that tell me don't do that. I'm putting another one up there tonight that says make sure you transfer your daily levels so that I won't forget again. And so, that is going to be key. It's going to be the key to your success. Sitting back, looking at what you've done, what went right, what went wrong, how are you feeling about certain things, and then you address them. And that's how we get better, step by step by step. So you see my process play out every day. You see I use the same scan every day. I don't go around trying to find out what everybody else says is moving. It's got to come through me. And it's not that I'm arrogant. It's that that's the way you have to be. You have to be that focused. And the stocks that you find through your scan, the parameters that you have that's going to give you the best opportunity of making money, that's what you have to trust. Now, if you don't trust it, and you start bringing in other stuff, your house is not going to be in order. And it's going to be very, very difficult for you to make any type of money. All right. Any questions before we move forward? If you do, type them out. I'll be glad to answer them for you. But while I'm waiting to see if anybody has any, no. This is today and next Tuesday is the special classes for the guys that are hanging out with me for 2 weeks. We still have classes on Wednesday. All right, so here are the tools that I use. AverageJoeTrader is not a broker. It's just a platform that connects me to my brokers. It takes the market data and puts it into a format that I could understand and I can make trades off of. Guys, all your platforms that you're trading off of, they're all simulators. That's all they are simulator. They're simulating the market data and putting it and giving it to you in a way that you can understand it and you can make trades off of it. Okay, all they do is connect it to your money in your brokerage account. And you're live. If it's not connected, it's still the same. You're still trading on a simulator, but it's just not connected to anything, to your money. Let's see. And many people, especially coming from other communities, stick to the idea that you should only risk 1 to 2% of your account per trade. Kind of following suggested general risk reward approach. But your idea is different in order to build a small trading account. Can we discuss this a little bit more? Absolutely. People that are telling you to risk 1 or 2% of your account probably aren't successful traders for real. You have to look at your account as an individual. If you only have $1,200, what's 1% of $1,200? It's $12, right? How the hell are you going to make money risking $12? Or if you risk 2%, how the hell are you going to make money risking $25? You can't. That's why people say if you have a small account, it's really impossible to make money. So you're going to have to risk more. There's no way around that. You're going to have to risk more. It's just inherent in what we do. Now, honestly, with a broker like TD Ameritrade, where you have 0 commissions now, you may be able to slowly make money that way. Okay, with trading in the smaller size. But if you're only risking $12 and you go in, you just can't make money trading a couple of shares on these stocks. It's impossible. So you have to be ready, willing, and able to risk a decent percentage of your account. But if you are trading, if you're sticking to the proper strategy, you're sticking to your trade plan, and you're trading with the proper size, you can make it. That's why it's important. That's why, I tell you, when you look at a trade and you're looking at how much room you need to give it, you need to know on average how much that stock moves within a 5-minute candle. And so if it's going to move $1.50 in a 5-minute candle, and you're only able to risk $100, then your position size is going to have to reflect that. My risk was about 5 to 6%. On a $5,000 account, I would risk like $300. Now that was on a good setup. Now I would risk $300. Now, when the market wasn't good and things weren't really clicking, then yeah, I would size down. Trade half size, risk $150. But 5 to 6% was what I risked. And I still try to do that today. Even though I've got a $25,000 account, I'm trying to keep it started at $30,000 every month, and then just trade off of that $5,000 using margin, of course. But I'm trying to show how you can grow your account. You don't have to trade big money. You don't have to trade penny stocks that can run 100%, 200, 300%. Those thin stocks, you don't have to do that. So, yeah, when I started with $1,500 a couple of years ago, I was using $100, $100 risk per trade. And man, it was really tough. It was really, really tough. All right, but that was a good question. So I use DOS as my trading platform, and again, it's just a platform. It's just a simulator, and you connect it to your account, and that makes it live. So, Speed Trader, TD Ameritrade, Centerpoint, I don't mind paying to use a platform that just works for me. It just flat works for me. Some people like the Sterling one. Some people, like others. Trading, like I've always said, is an art form. It's going to look different to everybody. I think I kind of explained that to you in the last class. We're going to talk a little bit more about that tomorrow to try to give you better understanding of what I'm talking about. But this whole process is about finding who you are as a trader, what you like, what you see better, and that's what you need to focus on. I use FinViz, and you guys saw that Sunday. I use that for my swing trade scans. I also use it in the morning when I'm vetting the stocks that's on my scan, I'll look at FinViz, look at the news that it has, look to see if it has any analyst upgrades or downgrades. All of that information is right there on FinViz, so I don't have to look in all these different places. So I use trade ideas for my scan. You guys see that, and then I'll plug it into FinViz, get the information that I need, and I pull up the TD Ameritrade, the Thinkorswim chart, and that's what we go through. You know, I use Thinkorswim for charting, and I didn't put that up here. I should have put Thinkorswim here too. I do use it for charting. I do not trade on Thinkorswim. I hated trading on Thinkorswim. But you know, thank God they, you know, DOS worked with them, and I was the first one on board. You know, went through the testing and helped them figure out a lot of stuff. Even though I'm the dumbest person in the world, king of the idiots, you know, we were able to figure some stuff out, and it works great now. Benzinga Pro, that's the news you hear sometimes. That I don't have to pay for. It comes free on Thinkorswim, which is another reason why I'm keeping it. Earnings Whispers, that's where I get all the information on the earnings that we trade, the swing earnings, the day trading earnings, everything that I need for that strategy there. Flow Algo is something I've introduced here in the last month. You know, I've tested it for 6 months to see how it could help. And I don't trade options, but the options flow, when you get unusual options flow, typically it's letting you know that something's about to happen in this stock. You need to keep an eye on it. And if it's setting up, if you're getting a technical setup and you're getting option flow coming into this thing, oh man, it can be really powerful. So I use the Flow Algo, the options, that option scanner to help tell me where the big money is coming in the options. So if it lines up with one of my stocks, then I know that's where I'm going to go with it. Chart Log and Trader View are the two like journaling platforms. Last year I used Trader View. This year I'm going to look at using Chart Log to do the swings. So I think both of those are pretty good. Chart Log is relatively new. Some traders, it was put together by some actual traders, and you know, I think they did a really, really good job. So I'm going to be trying to move over to that this year when I'm doing my swing trade recaps and stuff. All right, so are there any questions concerning the tools? All right, yeah, thanks for answering that, Oliver. Well, I mean, TD Ameritrade is the only broker that I pay zero commissions with. So, I mean, and I just started using this the last several months of 2020. You know, when they started with the DOS stuff, that's when I started looking at actually trading with TD Ameritrade, other than swing trading. All right, so let's take a look at my strategies here. Very, 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 very simple. All right, you can complicate it. And that's oftentimes, that's exactly what we do. You can complicate this strategy. Okay, the very first one, the opening range breakout. All right, or it's either going to break out to the long side or it's going to break down to the short side. So what I do is I wait for the first 5-minute candle to print. That's where typically that's going to be where all of the volatility is. All right, all of the volatility is in that first 5-minute candle. Now sometimes it spreads out over the first 15 minutes or so, could run a little longer, but that's when everything is kind of trying to get itself sorted out. So I wait for that first 5-minute candle. Sometimes it's really difficult to wait because you see the stock moving hard in your direction, taking up your profit potential, and it makes you want to jump in, and it turns around and it rips the other way on you. That's why it's really difficult, and that's the mental part of it. The actual strategy is really simple. I mark the high and the low. When it breaks the low, if we have room to trade, I'm going to short it. If it breaks to the long side and we have room to trade, I'm going to buy it. You can't sit there and argue with yourself. All of the arguing should have been done when you were building your watch list. That's when you talk yourself out of the stock. But if it made your watch list and the setup happens, you got to trade it. That's the only way you're going to get to where you want to be as a trader. You can't sit there and argue with yourself. The only thing you're looking at is where it's setting up for you to get in. Is there enough room for me to take profit to where the trade makes sense? And you should already know that before the trade even triggers. Because you should have already identified potential profit targets before the market even opens. You know, that's what we're doing those last 10, 15 minutes, waiting for the market to open. We need to make sure we know if the stock breaks this way, this is where my profit target is. This is what my stop's going to look like. When it breaks to the long side, I'm looking for that. The execution should be really simple. When it breaks the low, short it. When it breaks the high, buy it. And then sit back and wait for it to either hit your target, your profit target, or your stop. If it hits your stop, pack your shit and move on. All right, don't sit there. You know, I'll curse it out for a minute, but then I'm going to move on. You know, don't sit there and pout and, you know, spend 15 minutes crying about what could have been. You know, just pack it up and move on. That's what we got to do. It's like this morning, I mean, it was a train wreck. Pack it up and go. And because you never know. It could just continue to bleed. So that's why we have rules as part of our process. If we hit too many losses, shut it down and walk away. Tomorrow's another day. All right. You know, I don't know. Tomorrow may be crazy as hell. You know, who knows? But tomorrow's another day. I'm still green on the week. So, who cares? But that's what's gonna. Oh, let's take a look at now. Here's an example. Let's look at SQ from today. Here's an example of a 5-minute opening range breakout. Again, this is a little bit late. You know, a little bit late getting in. This is what we call a chase. And in trading, the chase is not a race. This is a chase and somebody realizing that they screwed up and that they should not be in this trade this high up. Take it and sit on your ass and wait for the next move. That's what has to happen. So what we're doing after the 5-minute opening range is done, after 10 o'clock, I really don't trade opening range trades anymore. They're good for the first 30 minutes. Because what that is, that's actually a momentum strategy. It's a safer momentum strategy than trading the 1 minute or 2 minute, opening range. It's a little bit safer than that, but we're still trading momentum. Usually within the first 30 minutes, the momentum is gone. Look at this chart. What's happened to the volume after 10 o'clock? What do we see? It goes away, right? So when the volume is gone, what the hell can we do? It's just gonna crap around until we get some more volume in, right? So we're gonna sit back and wait. And what happens is when a stock makes its initial move and we start to pull back, it puts in a top. All right, so here is the top right here. This is when it hit a top and it started pulling back. So there's the top. So now I'm waiting for it to pull back and form a bottom. And once it forms a bottom, I've got my first channel of the day. All right, and now I'm ready to trade some continuation. Now, there was a time where off the bounce, I would trade it off a level of support and looking for it to break up and then taking profit here at the high. The market changed dramatically last year. All right, so we had to adapt to the market. I didn't change my strategy. I'm still trading continuation. But instead of getting in early and taking profit on the break, I waited for the break. And once it breaks and it confirms, there is the trade. We get a pullback by the we put in another top right here. And it just so happens that was the final target. So it hit, it pulls back to the 9, pulls back to support. What did we just do? We just put in another channel, the bottom. So we just made another channel here, which I call a micro channel because, the big channel is already done. This is just a smaller channel here. And so once it breaks, you can buy it. Your risk is going to be where? Where's your risk going to be on this channel break? What's this stock doing? What's it following? It's following the 9, right? It's riding the 9 up. So why not make that your technical stop? If we lose the 9, let's take it off. Look how many times this candle wicked down under the 9 and held. What do you think? What do you think's happening here? When this candle's wicking down, what do you think's happening? Yep, stops are getting taken out, but the reason why it's getting taken out is people are wanting to buy more at a lower price. They're wanting to buy more at a lower price. And they see, man, there's a ton of orders sitting here on the 9. I want to grab some of these. That's why you don't put your stop here. That's why when I stop out, it's when we actually close below the 9 and the next candle takes out the low, then we're done. Technically, that trade's over. But as long as you're wicking down like this, all this is big money looking for volatility. They're trying to build their position some more. And where are they going to find the extra stops? I mean, where are they going to find the extra liquidity? Right there where people are placing their stops. So that's why where I place my stop is probably completely different than what you've learned or what people have taught you. It's completely different. You know why? Because everybody that has their stop where they have it, a lot of times I'm taking their money because I know what these guys are doing. We can see it happen every day. So the worst thing we can do is have our order sitting there with everybody else waiting to get scooped up. We don't want that. So that's why it's very, very important that you trust these technicals and don't let these wicks. Like I said, we're going to have a class on this after we finish the Trader's Mindset series. That next class is going to be understanding these wicks. So you know exactly what to start looking out for when these things happen. All right, so the stops on the opening range, the technical level is the actual opening range. So let's say I bought here. Okay, this is where, if you were waiting and taking a more conservative entry, this is where you would have bought. As soon as this claimed the 5-minute open range high, we would buy here. Your technical stop is a loss of the 5-minute open range high. That's your technical stop. Now, you're always, you're going to have a max loss stop. You're going to have a stop that's going to tell you that, okay, I can't lose any more money. So if you're only risking $150, then you're going to have to make sure that if that trade hits your max loss stop, you get out, regardless of whether it closed below this or not. You have to protect your capital. But you want to put your hard stop far enough away to where this could get tested and not stop you out. So you want to make sure that your hard stop is not going to be too tight, and then it's going to allow for the trade to work through some of that volatility that it has. Because remember, opening range trades are going to be volatile. We are trading momentum. Now, channel breaks are not going to have the same momentum as these opening range trades. They do make some pretty solid moves, as you can see here, but nothing like the whipsaw stuff that we deal with here, in the early volatile moments. And see, that's one of the biggest issues that new traders have when they come in. They're taught, about stop losses and protecting your money, and all of a sudden it gets to the focus is on not losing, and that creates a whole new issue. So it's not about when you first looking at the trade, I'm looking for profit. I already know where my stop's going to be. I'm looking for profit. We already know in our minds, where our stop's going to be. I just want to know how much money can I make on this. If I can't make enough money, then it's not worth it. No, it's not. So you really have to look at, and I know a lot of this is backwards from what most of these guys teach. But as you get further and deeper into trading, you're going to realize, don't do that, because that sets you up for this kind of setting you up for failure. So what you want to focus on are stocks that's going to give you the biggest profit potential, to where you don't even have to worry about your risk reward ratio. It doesn't matter, because your profit potential is so great. If you have a $4 profit potential, and you say, oh, okay, so I got $4 profit potential, so I'm going to make my stop $2. Why the hell would you want to do that? If you don't have to put a stop at $2, why would you do that? If you look at the chart and you only have to give it $1, why would you make it $2? No, it shouldn't. It's kind of flawed thinking to a certain extent. But that's what I do every day. I mean, you see it in front of your eyes. You see it work every day. And on days when I have red days, but I rarely have red weeks. And I don't think I've had a red month in several years. So I prove every day that my thought process, that my process works, what I teach works. The only issue that prevents it from working for other people is their mind game. And that's true for anybody that you learn these strategies from. It could look so easy. They could do it so effortlessly. But if you can't mentally handle it, it's not going to end well for you. That's why this year we're going to focus on helping you develop your mind game. That's going to take you to the next level. All right. So does anybody have any questions? Now, as I trade these setups, they're really, really simple. As I trade them every day, I'm going to go through them just like this. Going to go through them just like this. Same thing with the opening range trades. So make sure if you have any questions or anything, make sure you ask them in the community. All right, guys. I'm going to stop the recording here so it won't get too long. It won't take so long to upload. But if you have any questions, just shoot them to me. I'll be right here. I can answer them for you.